But how does India's performance compare with the rest of the global equity markets?
Yeah, Rima, if you just take a look at it, it's not been such a great year as you mentioned, though if you take a look at it, the rupee, in fact, has been a relative outperformer in comparison to the rest of emerging markets. But let's run you through all the global indices first. Developed markets, looking at it, the Dow is sitting with a bit of a cut. We have the Nasdaq that's been the big outperformer, while the European markets as well, if you take a look at it, they have had a fairly good year. So the CAC and DAX, both of them are sitting with gains of close around 10%, while the FTSE has been a relative underperformer. Focusing on emerging markets then, the Shanghai market is sitting with a gain of around 10% for 2015. Remember, that market has come off close to around 30% from the high point we saw earlier this year. And the Nifty, in fact, is down close to around 4.5%, though, in fact, we have come off close to around 13% from the high point that we saw in 2015. Looking at other Asian markets as well, the Nikkei there for the fourth year running, that market's giving you gains. The last time we saw something like this happening was in 2003, 2006 in that particular period. So good going for those Nikkei markets. They, in fact, have been on a big run on the back of the weakening that we saw in the dollar yen as well. Looking at the institutional activity, though, and why, in fact, India has been a bit of a relative underperformer, the FIs, they have been booking out in this year, at least if you compare it with the last couple of years. So the DI flows, it's been the strongest since 2018. And just look at the DI and the FI flows, it's a stark contrast to what we saw in 2014. So the FIs this time around, they've sold close to around 21,000 crores, while the DIs, they have bought close to around 67,000 crores. The last time we saw 65, 70,000 crores coming in from DIs was in 2008. Now, the Nifty is down close to around 4.5%, and we're breaking a winning streak because the last 3 years we're giving positive returns, so that, in fact, you need to take into account. Importantly, it's the worst year in the last 4 years as well, because otherwise we're giving positive returns. Taking a look at the headline indices, the Sensex is down close to around 5.5%, but in dollar terms, those are the past few records that we have for you. But let's focus on this year then. The Sensex, if you just take a look at it, it's down by 5.5%. Take the dollar into account and it's down close to around 10%. The broader markets have outperformed though, and the biggest drag this year has been the metal index. That's down close to around 30%. So let's run you through a few of those metal stocks then. Vedanta, Hindalco, Tata Steel, all of them have been struggling in this year. While if you take a look at it, some of these oil and gas stocks as well, and certain sectors, you have a mixed bag coming out of there. So you have Mkt In India, ONGC, both those two stocks are struggling. But the reason that the oil and gas sector hasn't underperformed, at least the index, is because Reliance Industries, that's the big boy over there, that's giving you returns of around 13%, a relative outperformer. Take a look at a few more sectors. They, in fact, as well have given you mixed returns. So no sectorial trend was playing out. IT space as well has been mixed. Infosys giving you a gain of around 10%. The auto space as well has been mixed. We've seen a big rebound from Tata Motors from the low point, though for the year, that stock is still down close to around 20%. And even the cement stocks that I track very closely, they as well have been a mixed bag. So there's no sectorial trend that's played out. In fact, in every sector, you have winners as well as losers. Pharma stocks as well, Lupin, the big outperformer, that's given you a gain of around 30%, while in fact we have something like a Dr. Reddy's that's down close to around 4%. It's recovered though from the low point that we saw. PSU banking stocks as well, they in fact are sitting with big cuts. So you have SBI, PNB as well as Bank of Baroda. The big losers are there, while from the private banking space, ICICI Bank has been the big drag, but in fact we have a few winners as well coming out of there. From the financial space as well, HDFC, the big heavyweight of the IndusInd Bank, is giving you returns of around 20%. ICICI Bank, the biggest weightage on the Bank Nifty, a big weightage on the Nifty as well, has been a bit of a disappointment. FMCG, it's done quite well this year, but the big heavyweight over there as well hasn't done too great. So ITC, that in fact has been a bit of a drag. It's down more than 10%. Capital goods stocks, they have got hit. L&T as well as BHL not giving you any returns in this year. And a few more losers should be up for you on the screen. The likes of Adani Ports, that's a new entry in Coal India as well, has corrected a great deal from the high point. But let's talk about some good times then. From the mid-cap space and frontline mid-cap stocks that trade in the F&O space, Ashok Leyland, 70% higher. We have India Bulls Housing over there, giving you returns of around 60%. You pull up a few more stocks, something like a Dish TV as well, has given you a return of around 50%. Remember, that stock has corrected 15% from the top. Mid-cap pharma has done very, very well. So no confusion on that front. Auto Pharma, Wockhardt, Ajanta Pharma, all of them have given you big returns, but a few losers that have really destroyed your wealth, something like an Amtech Auto, should not have put your money in there. Unitech, you would have thought it's a double-digit stock. How much of money can I lose in 2015? Now it's a single-digit stock, And even Just Style, after running away, that stock has corrected a goodish bit. Banking stocks as well haven't done too well, at least from the broader markets. The likes of Bank of India as well as other PSU banks and metal stocks as well have taken a hit. So SAIL, NMDC, they're losing out over there. But let's talk about some big wealth creators in 2015. We have Uniply in there with a return of around 1,000%. Mangalam Drugs as well. It's been hitting lower circuit non-stop over the last 10 to 15 trading sessions. That, though, has given you returns of more than 900%. The alcohol stocks as well have done quite well. And all sector technologies as well has been a big gainer. Fundamentals as well, not looking too bad. Pull up a few more gainers. We have had some of these managements on the channel in the last few days. Esther Industries, NCL Industries, giving you returns of more than 300%, and Quality as well as Tata Elxsi. So Rima, stock-specific market, you made money. Headline index, a tad bit disappointing, and some of them have really ruined the party by an investor wealth as well.
That's a look back at Dalal Street in 2015.